Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. Now, as always, before we jump into the markets in my portfolio, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and most importantly, make your own decisions. Besides that, all the tools that I'm using, the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing, as always, that I truly recommend is that if you haven't read it, check out the Elliott Wave Principle. You can read this wonderful book for free online if you use the link that's in the description down below. Now, with that said, we'll jump into my portfolio, and we can see we have another break-even start into the day. If you haven't been here for quite some time, yesterday I cut some of our positions, so in Barnes & Noble Educational, we approached the level where our pattern became invalid, so we took the small $80 or $90 loss on that one. I also decided to cut our position in cost because the pattern there simply wasn't developing the way we wanted. And instead of waiting for it to eventually turn into something that I can read again, because at the moment there was simply no pattern that I could see, I decided to take the small loss there as well. And additionally, I'm not sure if we still see it in the history. So COS, Green Wave, the small, in quotes, gamble position that we had there, we abandoned. And the small Faraday Futures Inc. position we also abandoned. So it wasn't the greatest day, but I have to say it feels good to have the portfolio cleaned up. With that, we have positions left in Immersion, NEO, and GameStop. GameStop being our by far biggest position, followed by NEO, which is only 1/10 of the size, and followed last but not least by Immersion, which is even a quarter smaller than that. So yeah, it's like a very, very, very small position. Against the GameStop and NEO shares, we have covered calls sold that we can see with an expiration on April 17th for GameStop at the $35 strike price and an expiration on the 25th of April at the $6.50 strike price for NEO, which means that for the purpose of this stream, what really is relevant is obviously the movements in GameStop. As I mentioned yesterday, we reached the 100% target area and the 78.6 retracement, which could potentially serve as an area of turnaround. However, it's also possible that we go a little bit further here. The worst thing that could happen from a pattern perspective would be that we actually retrace below 20.30, because if that were to happen, this entire labeling 20.30, where at least this part of the labeling would become invalid, and we would have to try to figure out where exactly I got things wrong. As long we can remove that destination channel, as long as we stay above 2030, our pattern is very much alive, and we can just wait and see how things play out. I have to say, considering the financials of GameStop, so that it's debt-free, has around $4 billion in cash and so on, and even if its business model, so buying and selling used games or buying games for cheap that are used and selling them again, outside of selling collectibles and other stuff, might not be the most future secure business without an expanded online presence or so, but considering the war chest that they have, the interest that war chest earns, I believe that the company is in a great position to grow over the next couple of years, even in an economy that has less consumer spending, because given the fact that GameStop is debt-free and has a decent war chest, it should allow them, or theoretically make it possible for them to acquire other companies along the way that are struggling more and are affected more by a decline in revenue in combination with having debt to service. Either way, so therefore I'm still bullish on GameStop in the long run, and we're going to keep holding our shares. We also at some point might have to, or we don't have to, but it would be nice to at some point go through all the options premiums that we earn from GameStop and actually calculate our accurate average, because it's way, way, way below $24 if we consider all the premium that we earn from writing covered calls against our shares. That about GameStop. From the way it looks today, as said, we might get a little bit of a push further down. Visually, it's hard to say with 100% certainty, but visually this could be some form of 1, 2. 3 would in that case be not possible, so 3 would need to be somewhere here, 4, and we get another push. And then we finish basically this 3-wave corrective formation and go further up. But only time will tell for sure. Until then, we keep writing covered calls at the $30 or higher strike price. As I said, right now we have $35 calls that expire here on April 18th or 17th. And therefore, we don't try to maximize our premium here. We try to maximize basically what we can earn under consideration of potential future movements as well, while trying to stay ahead of the curve and to prevent our shares from being called away. Yeah, so that about GameStop, and with that we can actually look into Immersion. Immersion is going to be an interesting play, although it's one of our smallest positions. There, basically, we expect to see 669, the 61.8 retracement, at which point we may or may not increase our position, depending on how much available cash we have at that time, to then potentially profit of a further upward movement. We have a relatively nice 5-wave move here, so it should be followed by a 3-wave or multiples of 3, so 6 waves, 9 waves, and so on, corrective pattern, and then followed by another 5-wave move up, unless I made a mistake somewhere along the way. So it's going to be interesting to see, because unlike the other stocks where we cut our positions yesterday, here the pattern is actually relatively clear. And I fail to see where I could have made a mistake here, to be honest. I mean, time will tell. Maybe I'm wrong in this one as well. But again, it's a relatively tiny position in our portfolio, so it's not that it matters very much. If we were to increase our positions here, we might also be able to start writing covered calls. As we can see right now, we could start doing that, but it would eat up our currently available cash balance. So if we buy the remaining 50 shares to reach a total of 100, since each option represents 100 shares. On the other hand, we might already add a buy order at 669. So that's what we can already do, to say, okay, at 669, let's just enter it manually, 669. So double checking, we have the right retracement area. So the low here and the high here. So yeah, at 669, we would buy an additional 50 shares, and it's good till canceled. And so we can submit this one. So if or when we hit, again, I expect that we hit that area, we could actually go a little lower. So although we would only save cents if we just barely break through, so not sure if it's worth it to try to aim lower here. But at this point, we would then increase our position, which would then allow us to also write covered calls against 100 shares in Immersion. I think moving forward, we should keep an eye on to only open positions where we can get 100 shares at least from the start, so that we from the beginning can also write covered calls against those shares. Now, markets are already open, which means we can check for our NEO shares, or not NEO shares, but for our covered calls, which are April 25. There's still 43 days till expiration. They're at the $6.5 strike price. If it would be, or if there would be a point to roll them out to a week. So if we can, we have exactly 3 calls here. So if we buy back our existing April 25, $6.50, and instead sell May 2nd, $6.50, or maybe even $7. So, but there is no quote, no trading volume on the, or no bids, as we can see right now. So we don't get a price, which makes it impossible to estimate. Now on April 25th, we can see that the $7 options would be around $14 right now in the mid. And so, yeah, like, hard to say what the accurate price will be here once we get some volume. So yeah, no rolling for those. Then we can check for GameStop as well. There we have set the April 17th, $35 call options right now. So if we were to buy those back and show the weeklies, so April 25th, for example, if we roll them out and we sell those in return, here we could sell or do a total of 6. We would get a total of $120 if we do that right now. So $20 times 6 minus the fee of $6, so actually $114 in total. It's not a lot. And it would add an entire week, unless, yeah. For GameStop, we could also consider, yeah, I mean, the correction could be over here, and then from here we would get 1, 2, 3, 4, yeah. It's hard to guesstimate how how much lower we can roll the options. So if a $30 strike price would still be sufficient. Theoretically, yeah, we can run the math. So if we, definitely not if we roll them out. So if we roll them to April 25th, we definitely don't want to necessarily roll them lower. But if we roll them lower to 30, for example, and stay on the same expiration, we would be also making roughly the same amount of money, so a few dollars more. And if we shorten the expiration, so for example, to April 11, yeah, we would still pocket around 50 or yeah, like $60, actually a little bit more than that. But that would then get us to the April 11 here. And however, to the $30 strike price. So it would give up quite a lot in wiggle room to the top just to cut off 1 week of expiration, which obviously is not necessarily what we want to do. Now, if we would be sure that there would be further downward movement, we could obviously roll them closer and further down, but we don't necessarily want to roll them below 30. So that makes it a little bit of a problem, or not a problem, but yeah, so. We could roll them to April 4th, 30, so that would be something that might be worth doing, because I don't think by April 4th we will be up till here again. And even if we would be up till here again, we potentially could just roll them up and out again. So we would then basically take a loss on those options if we want to ensure we keep our shares. Or can we roll them closer and still get a credit? Maybe March 28th, yeah, that would be maybe possible. So to roll them basically here, would need to have something go in our favor. So to roll them here, but then we technically could roll, yeah, I don't want to roll them down to 30. So I guess we'll just keep them for now. So I'm sure there are people with more options trading experience out there that have a better feeling for how to roll them to squeeze the last dollar in premium out of options or out of the options. But thinking about it, so I rather slow but steady accumulate premium than risk having to then roll for a credit or much further out just to avoid having the shares called away. So I guess we'll stick with that for now. So I said immersion, we're waiting for the 61.8 retracement and we'll actually increase our position. NEO, as I pointed out yesterday, at the point where we hit the 261.8 extension, that it's possible that we'll get a retracement from here. Now, visually, we should be done with the correction. The only exception would be if this is in some form not the end of wave 5, however, then this 5-wave move would not fit in altogether, and then we should actually go down from here. So our hard stop loss would be at 363. If we hit that, we take a small loss on the position. However, we also reduce that loss by selling the covered calls against our position. And we now here have still, what did we say, April 25th. So just double checking. Yep. So basically, as long as we stay below here, so below this line, by that time, the options will expire worthless, and we'll just get to pocket the premium and then write new covered calls, maybe at a different strike price, or maybe even already get out of the position and pocket a profit, depending on where we are price-wise. Yeah, that's that about our existing positions. As said, as far as Bitcoin goes, it's possible that we are in a bigger corrective move, but even if we are, assuming that this first move is finished, we should get a retracement further up, and we would then utilize a trailing stop loss to maybe get out of our position or so. If we're wrong and it goes further up, we make a little bit more profit. If we're right, and then there is a wave C coming, we actually don't have to wait out through a 30% pending loss. Yeah, Algorand, what's Algorand doing there? We hit the base channel. We technically are still missing a fifth wave. We exceeded the 100% target area a little bit. There's also 161.8 target area further down. So far, I still believe there should be another wave coming up. So we're just going to hold our small Algorand exposure as well. HNT went now also a little bit further. So we were waiting for basically the break of the low here to make this a 3-wave move. It's going to be interesting to watch to see basically if this is going to be a free wave corrective move followed by further upside, or if from here we actually see a slow decline. Yeah. Considering that the HNTs that we are holding, we all received from running helium hotspots, I don't have the feeling like there is an investment tied to it. So we're just going to wait and see if it develops, especially since there is the option that this is only a corrective move before the next upwards rally. Storage, there we will need to revisit our pattern, because obviously that's a 3-day chart since 21. So here we'll consider a stop loss at around 19 cents. So that would be the point where clearly there is no upwards corrective, further upwards movement, but we are still in a complete downwards movement. But until that happens, yeah, maybe at some point we get to relabel it. This could still be a combination of corrective patterns. How are we doing retracement wise on the bigger? So from this wave here, yeah, so we are around the, let's actually get rid of those few things here that are right now quite confusing. We are around the 78 point, or slightly below the 78.6 retracement. So basically here it comes down to, will we break the 19-cent mark or not? As long as we stay above, I mean, we're still a decent margin above it. As long as we stay above, this could be wave 1, wave 2, and we get a wave 3 eventually. Only time will tell. XRP is still trading sideways, and it should. We're here on a weekly chart, so things take a little bit. Visually, this could basically be wave A, wave B, and wave C takes us down to the 38.2 retracement. So could be something like this, wave A, wave B, and then we can see the 100% target area overlaps nicely with the 38.2 retracement. With that, if it drags out for another 1, 2, 3, let's say 3 to 4 weeks, we would also leave the so-called acceleration channel that's based on using Kennedy channeling technique to label Elliott waves, and would then potentially expect to start to see a 5th wave that takes us further up. Now, yeah, not to go too far advanced, but if this is indeed wave 3, and wave 4 takes us to the 38.2 retracement, we would then have a wave 5 target that is around 150% to 500% further up. So there is quite some potential upside. So we'll keep an eye on it. And if we get a confirmation in terms of bouncing at the 38.2 retracement, we might shift some of our positions from, for example, Bitcoin into XRP instead. XYO, on the other hand, now might have finally hit the end of a bigger corrective move. It's similar here. We had our wave 1, wave 2, what we believe to be wave 3, although the orthodox end of that wave could also be this point here, a 3-wave corrective move. And with that, we hit the bottom of the base channel. Usually a wave 4 would, usually, not always, would hit the top of the base channel, sometimes the median, sometimes the bottom. And there are also cases where we break through. So like, we're not talking about guarantees and certainties, we're talking about probabilities here. And it's, however, a very, very likely point for turnaround. If we check retracement level-wise, since I don't recall it right now, let's check here. If this is the wave that we're currently retracing, where are you? Then we would actually be, yeah, slightly below the 61.8 retracement. So that would be an okay area for turnaround as well. We obviously would have liked to bounce here directly on the level. But yeah, so from the looks of it, there might be another wave coming for XYO. So let's remove the levels that are irrelevant right now. And if that were to happen, then we would expect that wave or that move, we also have to come up, that's fine, that move to basically reach into the area here. Yeah, what's relevant here is, what's relevant here is basically this point 2 that is at a low of 0.463 cents. If we break that point, the pattern becomes the pattern becomes invalid or invalidated, and so which means there's still around a little bit more than 50% risk right now. But on the other hand, there is also 400 to 800% return in the cards, or 300 to 700% return in the cards, if this is indeed the end of wave 4. And yeah, that's then here pretty much it about that. If we take a look at yeah, front line is probably not loading. No, now it's loading. That's interesting. Yeah. That would also be a worthy investment. We can see that after the earnings, we had a free wave move that is almost perfect. It goes a little bit further than expected. It's possible we would have to consider two scenarios here. So we bounce from the base channel of this here, 1, 2, 3, 4, and should theoretically get away 5. It's possible that, however, we are correcting something bigger in some way, then this would be 1, 2, 3, 4, we still get away 5, then we get a recovery, and then we go further down. Right now, we would have bounced precisely on the 50% retracement, which is obviously a suitable candidate for turnaround areas. And in order to, in quotes, get a better idea, we would have to look closer, see if what even on the weekly chart looks like 1, 2, 3, 4, 5, followed by potentially A, B, C. So there might be a little bit more downside, and then followed by the next 5 waves up. Now, if we are further going down, then we still should get to see potentially A, B, and C. So their trailing stop losses would not be the worst idea in case this turns into A, B, C, followed by 5 more waves down. However, it's, as I said, possible that the correction is done here, and what we're seeing is basically 1, 2, and then we get wave 3 further up, 4, 5, and so on. Yeah. So definitely that's an interesting or more interesting position. SMCI, it looks, by the way, but that removing a couple of symbols fixed our charting issue, which is quite interesting. Yeah, SMCI, as said, I believe that what we are looking at is basically a big A, B, C pattern. And now that we're done with it, we get the next 1, 2, 3, 4, and then wave 5, which is then wave 1, 2, and so on, that overall eventually takes us down into the sub $10 area. I believe the company is hugely overvalued, and yeah, it remains to be seen if I'm right with that. But basically from here, in my opinion, we either have wave A, wave B, wave C, or we have wave 1, 2, 3, 4, and wave 5, followed by A, B, C, followed by further 5 waves down. So either way, I see yeah, like more downside here to come. Again, but that's just my 2 cents about it, so don't bet your house on it. What might be interesting is DJT, because here I actually thought that we already finished our correction here. You can see visually that this might have been a 3-wave move, followed by the next 1, 2, 3, 4, 5. However, after that, we broke this level, which invalidates that assumption, which makes this actually a weird pattern and hard to label, because this means we would have 3 waves. I'm not even sure if there would be a corrective pattern that we can label exactly like that. I'm gonna look for my cheat sheet if I can find it. Should be somewhere in, there it is, yeah, page 98. So the 1-page cheat sheet that's also labeled down there. Yeah, I'm honestly not sure what kind of corrective pattern this could be, unless this here is actually some disguised 3-wave move, so which would be 3 waves, 3 waves, 5 waves. So this would need to be cannot be a flat, because in a flat this wave would be further down. Yeah, I'm a little bit out of it, in quotes, of what this could be, and I obviously believe that overall, their company is hugely overvalued. Yeah, so there's no value in the business itself other than indirectly, in quotes, bribing the current orange buffoon that's sitting in the White House, or the orange buffoon that's currently sitting in the White House. But yeah, I also don't have a horse in the race, so it's not that I care that much, but it's curious to see how this will develop as a pattern. It's hard to see this move as a corrective move because it was a strong rally, and more likely is 1, 2, 3, 4, 5. Which means as long as we stay above the low that we had here at $11.75, we're basically good. The big question would be, do we turn around here right now, or do we get to the 78.6 retracement, or will we eventually break that point and invalidate the little bit of labeling that we have on the chart? It's going to be interesting to watch, but again, I would not necessarily throw money into that stock anyway. So yeah. Moving on, do we have anything on the chart? We have Vero with an interesting or weird pattern here. It looks like, what's the low here? 36.12 and here 36. So that's actually starting point. It looks like we have a 1, 2, 3, and then 4. So actually it looks like we let's delete this. It's been a while since we looked at this one, so I don't fully recall what we labeled here. So it's possible that what we have is 1, 2, 3. We might have the orthodox end here, and then 4, and then that could be indication for potential wave 5. But the weird part is this here. So unless we basically have 4, and this is the orthodox end of wave 5. So I probably, considering the previous history, would just stay out of it. But yeah, maybe at some point this actually turns into a pattern that's easily to recognize. What else do we have? Amazon. Yeah, we still will have to label. At this point, it becomes more likely. So I shared in November that basically it looks like we still have our wave 5 unfinished, and that technically the minimum target that we usually would expect would be 251.40. We unfortunately fell a little bit short of the target, and it becomes clearer that we are most likely retracing at least this entire move already. So that basically this is 1, 2, 3, 4, 5 finished. And this here will then turn into A, B, C, or we're retracing an even bigger move that basically starts earlier. But yeah, right now there's still around, what, 20% downside for considering a potential entry. That would assume that we are only retracing this. Yeah, we're on the weekly chart, so we will have to wait a couple of months to see how this plays out. But it becomes super unlikely that this is basically an unfinished wave that still gets a push up, but most likely, again, this wave is finished, which means this one, and this one is finished, which finishes the entire wave, which means we're retracing right now the entire wave, or correcting the entire wave as well. Yeah, what else do we have? Apple, haven't looked at Apple in quite some time. Okay, 8-hour chart is probably not good enough. Let's jump on a weekly chart. Let's see if we get it to load. Okay, that's a little bit too close. On first glance on the weekly chart, Apple might offer some upside soon, because visually this might be a 3-wave corrective move. That then already, so again, don't bet your house on it, but again, I'm just saying visually without confirming the bigger pattern, we are in the area where this could fit as a 3-way corrective move, and is then followed by the next upward movement, or by sideways movement first, by basically turning into a combination of corrective patterns. In that case, we probably have something like 1, 2, 3, 4, 5 finished here, and are right now just correcting this area. It's also possible that we're obviously correcting a bigger area, but then we would have to label more, which we're not going to do right now. And I think with that, we're actually going to call it a day. So for us, what's relevant is GameStop, which again should, in my opinion, be at the end, or the area where we see the end of this current long corrective move that started in January, and start to develop the next 5th wave, or the 5th wave that is still missing upwards. Yeah, obviously time will tell if I'm right. In NEO, we expect a little bit of a correction. Yes, I could have a little bit more patient and basically looked closer and tried to enter a couple cents cheaper, but I don't think it makes a huge difference in our position. And after this correction, there should be another push up, then we should get another correction, and then we should get another move up, and then another correction, and so on. So like it always goes, 5 waves up, 3 waves down, 5 waves up, 3 waves down, 5 waves up, and so on, yeah. And yeah, so I think we're good here. We keep an eye on everything, and we'll just have to wait. Since we're here on a daily chart, it will also take weeks for the pattern to develop, to either prove right or prove wrong, or prove us wrong. And yeah, in immersion, same thing. We're waiting for the hitting, or the 61.8 retracement here, to increase our position a little bit, to allow us to write covered calls. And ideally that will finish the correction, maybe with a small spike through, and we then get to see the next 5 waves upwards developing. Yeah, so that's pretty much it. And with that, I'm, as said, gonna leave you to it for today. Thanks for stopping by. I hope you were able to take something away from today's streams. And with that, then see you tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.